Hello guys, this is your modern day spokesman, and today we're going to be dealing with borrowing cost standard IAS 23. This is part 2. I've already done part 1. Check it out if you haven't seen part 1. Now let's jump into the example. The directors of Chedza Ltd wanted to manufacture a machine to be used in the production of car batteries. The machine is regarded as a qualifying asset in terms of standard IAS 23 borrowing costs during October 2018. The company started manufacturing of the machine on the 1st of January 2019. They received a loan of 300,000 from KK Bank to partly finance the manufacturing of the machine. The funds were deposited into Chedza's bank account on the 1st of January. Guys, sorry about the crashes and the corrections. Trying to make the example very comprehensive and simple. The loan bears an interest of 13% per annum payable monthly. The loan must be repaid in full on the 30th of November 2019. Now, another important fact is that they give us an indication when the machine will be ready. They said it's going to be ready for use, and it is essentially brought into use actually on the 1st of October 2019. Now guys, it's very important that you highlight the information if you can, so that when you go and look for the information, you won't have to hunt it down, because time is very critical in an exam situation. So guys, I tried to make the example as comprehensive as I could and as short and simple as I could. So the interest on the loan, on the lease, is given. This is something related to the company, but it's already given, so you don't have to worry about that. So now the first step is to calculate the total finance cost. We want to know the total interest that I have to pay on the loan. So the amount is 300,000, the percentage for a period of 11 months, which is essentially from the 1st of January to the 30th of November. So this is what we incurred. So now we want to know how much of that incurred interest was actually capitalized during the capitalization period. The machine was brought into use on the 30th of November. So that means our capitalization period will run from the time when we got the loan up until the day before the loan was granted. Sorry, the day before the item was put into use or ready for use as intended by management, which was 30 September, which means this is just 9 months period, right? So the loan amount, the percentage, and the period of capitalization was 9 months. Yes, so that means of the 35% that the 35,000 that we incurred, 29,000 was actually capitalized. By capitalized, we mean it was added to the cost of the asset. Okay, so this is how you would display or disclose this on your notes to the financial statements, your profit before tax. So now guys, this is how it would typically look like. You've got your total finance cost there, but I'm interested on the borrowing side, or borrowing cost capitalized side of things. So this is your borrowing cost at 60,250. The reason for this amount is that this is what we calculated when we were calculating the finance costs, which were capitalized. We got the 29,000 and interest on the loan, and also the other given interest, which was 31,000. So this gives us a total of 60,250, which was capitalized. So now, very important, right? So the capitalized interest in regards to finance cost on the profit before tax is actually a minus, right? You have to reduce the total, the finance cost, by the interest which was capitalized. But you only do this for the finance cost, on the side of finance cost. But when we are dealing with the PPE, it's actually an addition. The same amount is an addition because you are adding to the cost of the manufactured asset. So when we are dealing with borrowing costs in PPE, we actually reduce it by the capitalized amount. When you deal with it on the profit before tax on the notes, you actually have to add the amount. So you actually have to reduce the amount. You're reducing on profit before tax, and you're adding to the cost of the asset on borrowing cost capitalized. Guys, thank you for watching. Please leave your comments on the comment section. Don't forget to subscribe and watch out for the next video.